And we have Brian Tornow of Strassman Insurance in the studio with us today. Brian, thanks for being here.
Oh, it's my pleasure, Kip. Happy to be here.
Good. You've got some very strong views about people who kind of let liability insurance go and never get it and end up having some serious problems. Can we talk about that?
Sure, absolutely. Being that this is the Entrepreneur's Radio Show, and most of your businesses start out into home, I thought the home-based business was a good place to talk about today. And there's a wide array of businesses that start up and operate out of the homes. There's side businesses such as your Mary Kay, Tastefully Simple, Longaberger type basket things.
Yeah.
There's contractors, there's people that do tutoring, give piano lessons. There's also people that have little farms, and there's people that do daycare. A whole wide array of types of businesses, and they all have their different exposures.
Brian, this is a really important topic, and I'm glad that you chose this, because there are, at least the last time that I read, about 18 million home-based businesses, and that's where everybody starts. But a lot of home-based businesses continue as home-based businesses.
Absolutely. And that's a good thing. It can save the entrepreneur money. They don't have cost in renting facilities to operate their business from. But there are a lot of pitfalls in operating your business out of the home. There's some things that homeowners insurance does cover, but there's a lot of things that it doesn't cover.
Okay, first lesson here. If you have homeowners insurance, that's good. But it may not cover everything if you have a home-based business.
Correct.
Let's talk about that one.
It's a good place to start from a property standpoint. Say you run a small business like your Mary Kay or Longaberger Basket, or some of the jewelry businesses that are out there that people hold parties for. A homeowner's policy, a standard homeowner's policy, provides $2,500 worth of property, business property, while it's at your house.
What does that mean? You mean, for example, if you have a little inventory or something like that?
Exactly.
Okay. All right.
Inventory, tools and equipment, things like that.
Computer.
Computer, copy machine, fax.
Gotcha.
If it's used for business or business inventory, it's limited to $2,500 while it's at your house.
Brian, is that most policies? Is that a pretty standard?
That's the standard, the industry standard coverage amount. Now, if it leaves your house, that changes to $250 worth of coverage.
Oh, wow. Now, what do you mean if it leaves? You mean if you put it in the garage or at a barn or...
No, as soon as it leaves your premises, once you drive off your driveway.
Oh, my golly. Okay, you're in your car and you got your laptop.
Right.
Okay.
Right.
I see what you
now, if you have a separate building that's dedicated to your business, say a contractor, has his garages. His business has taken over his garage. He has all his tools and equipment. He's got, lumber, bricks, whatever, depending on the type of contractor he is, and his garage is strictly used for his business. Then that building will most likely not be covered by his homeowner's policy.
Gotcha. Oh boy.
Because it needs to be covered under a business policy because it's a business structure now.
Sure. I see what you mean. Oh my golly. Do you have any horror stories that you can talk about, that somebody that had a business in their home and had a regular homeowner's policy, but all of a sudden something terrible happens?
Absolutely, I do. It wasn't one of our clients, but a friend of a friend babysat kids in their home. They was a family that their kids had grown. And so the mom was want to take on a little bit extra income, so she watched some kids. And she was very good with the kids. However, one time somebody came to the door while there was lunch going on, and unfortunately the proper securing or strapping mechanisms to the high chair weren't in place. And she went to the door while the kid was in the high chair. She came back, and unfortunately the child had strangled himself because they had slid down and the strap got caught around their neck. It was a horrible situation. And she was very close to the parents of the child, obviously. They knew each other personally even before this happened, even before she took on the kid. But she did not approve the business with her homeowner's insurance. And so they did not have any special endorsements on the homeowner's insurance. So, of course, a lawsuit ensued. And they were on the hook personally for the lawsuit, in addition to the trauma that happened with the child.